presentation was the Economic and Real Estate Outlook presentation. And the gentleman that gave the presentation was talking about the positives and the negatives about the current market. The first part about the market he was talking about was that the capital markets are starting to recover, which means that money is slowly starting to become available for commercial deals. Housing prices are stabilizing, which is important. Single-family houses have to stabilize before the commercial markets come back. And then there's deleveraging of the consumer, which means that the consumer can't go out and pile up a whole bunch of debt like they've been doing in the last few years. The negatives, which are actually a positive for us, is that there's a foreclosure tsunami coming for commercial real estate deals. And I'll talk about that in a minute, but there's a huge wave of foreclosures coming in. If you will just take 2 years out of your life and focus on this particular aspect of commercial real estate investing, you will set yourself and your family up for a lifestyle of wealth and abundance. It's just as simple as that. He went on to talk about the continuing credit losses that are happening in businesses, unemployment weakness, exploding deficits, oil price rise, and dollar weaknesses. But what I wanted to do is I wanted to show you some key graphs that he pointed out that shows where we are in this particular recovery and where the opportunity lies. Look at U.S. unemployment growth. It peaked out here in the first quarter of 2009, but yet it starts to recover over here, which means there's a limited amount of time that we're going to be able to capitalize on this particular market. Look at commercial mortgage maturities up here. They mature in 2011, 12, and 13. This is when the big wave comes. This is when the tsunami is about to hit. So should we get ready now? Should we wait until 2011, 2012? Do we start building our momentum now? Yes, we build our momentum now, and we start getting the low-hanging fruit that's in the market right now. Look, there's almost $125 billion of commercial troubled assets on the market right now. Delinquency rates on commercial real estate construction is at an all-time high at almost 14%. Cap rates, look at the way they've shot up. When cap rates are low, that means value. That means prices are expensive and there's a lot of value in the market. When cap rates are high, that means value has left the market and prices are low. Look at where they've shot up to. The cap rates are high. Also, office unemployment growth is way down, but check this out. Look at this little hook right here. It's starting to recover, and that's important. Office availability rates in the downtown and the suburban areas, they're not at all-time highs, but they're getting up there, which means when we buy on actual dollars, the current income, that's how I'm going to teach you how to invest in these assets. Everything's based on actual numbers. That means we're going to get some really good deals. Same thing with downtown office rent growth. It just started to increase for the first time in the last quarter of 2009. Existing single-family housing inventory. This is the number of properties on the market, and look at the way they're coming down, which means the single-family market is starting to recover, which means the commercial market lags that by 2 to 3 years. So there's a window of opportunity that's open. The single-family markets are starting to recover. It's time now to focus on commercial. Existing medium home prices of single-family properties were devastated over the last couple of years. But look at this, first quarter 2010, 1.4% increase. The foundation of the recovery is happening. The window of opportunity is here, and it's open. Multifamily rental housing starts. Look, it's way down to only 80,000 units. Do you know what's happening in the market right now? There are the echo boomers, the babies of the baby boomers that are coming into the marketplace for the first time. And there's going to be between 70 and 74 million of them coming into the market over the next 8 to 10 years. There's not enough supply to meet the demand, and that's what this is saying right here, which means there's a huge opportunity in the multifamily space right now. Retail vacancy rates, all-time high, which means we can get retail properties cheap, maybe the cheapest ever. Economic outlook for 2012, economic growth at 3%, unemployment rate down to 7%, unemployment growth 1.5%. That's good. Also means our commercial properties will recover. Interest rates, the T-bills and the T-bonds, what our commercial loans are based off of, at 5 and 6%. And it states that the economic recovery continues, unemployment still elevated, higher interest rates and inflation, and higher tax rates. So what does this mean? What did I just share with you? What I just shared with you is opportunity. Opportunity in the commercial real estate market. The best opportunity for you to change the situation that you are in very quickly and for the good. Why is now the best opportunity that you'll have to buy commercial real estate in the next 40 years? Because 61% of all commercial mortgages are going into default by 2012. 61%. The opportunity is huge. Over $120 billion in foreclosed assets are coming onto the marketplace. There has never been a better opportunity to secure yours and your family's financial future than in today's commercial real estate.